Imagine this, you're looking at every single headline on the Metro Vancouver market, housing market's crashing, sales are all-time low. But guess what? The Metro Vancouver housing market did not actually crash this month, but it didn't rebound either. And honestly, that may be the most important part. Sales were up from January, but we're still well below normal. Inventory is elevated, prices are softer than a year ago. So instead of a big comeback or a major drop in prices, what we're getting is a market that feels slow, heavy, and surprisingly stable all at the same time. And if you're trying to decide whether to buy, sell, wait until spring, maybe prices are going to drop even more, what's more important is understanding the numbers than knowing what the headlines are saying. And we're going to get into the numbers, as you can see here, for detached townhomes and apartments. But wait until the end of the video. I'm going to go through the full article for this market report, and what you'll see at the end is crazy. So these are the overall numbers. I'm going to jump over here to 𝐎𝐓𝐇𝐄𝐒 where we can see the detached housing report for February 2026. And I like this view right here where we can kind of see everything at a glance. So sold count February 2025 and 2026. So we can kind of see year over year trends. We're down 9.5% year over year. Median sale price is down almost 6% year over year. As you can see, 1.85 mil down to 1.74 mil. The percent sold of original asking price were down as well. Sold versus assessed value were down as well, 3%. Median price per square foot down 5.6%. New listings, finally we see some positives, but it's new listings. So more supply. And then if we go down here to the changes in pricing, we can kind of compare. This is February right now. This is month over month change. So we can see the sale price actually jumped from 1.68 up to 1.74 month over month. Inventory is up 200, almost 300 listings. So it looks like sales are up, prices are up. Inventory is also up. So let's just see, we are still in a buyer's market. So we're at 9.1% sales to active listings ratio. So we are seeing an upward trend here as we go into the early stages of the spring market. This is for detached homes. So let's just switch it over to apartments. There we go. Back here at the same view. Sales are down for apartments 15.3%. Holy smokes. Now for percent sold over the original asking price, we're at 15% before and down to 7%. That's half the amount of listings that are selling over their asking price. Median sale price dropped year over year, 6.4%. Golly. Assessed value ratio versus the sale price is also down 4.2%. Median price per square foot down 6% for condos in Metro Vancouver. Days on market is up 16% from 15.5 to 18. And then let's see inventory. Inventory is down and new listings are down. So it's a good sign for a potential reversal. But let's look at what prices are doing. So we're down here at the end of December, 640K. Median sale price, we're up to 650. And then now this month, we're up to 660. So we're actually seeing median sale price start to increase. Whereas, this is March 2025. We can see all throughout the year constantly dropping. Big drop in December. And now we're looking like we're about to rebound, actually. There is a lot of seasonality in this because we are heading into the spring market. And this was a big drop off in December. So if we were to draw a line, let's say from March straight through here, we would actually seem to level out around the 660, 670K range. So we are kind of getting back on track. So it might not be a full rebound. We are in a balanced market, 14.1%. So I believe last month we were actually closer to the 12% marks. This means that listings are down relative to the amount of sales. So actually pretty good news for condo sellers. If you're a condo buyer, it looks like there's still some really good deals, but that might change as we get into the spring market. All right, let's jump into townhomes really quickly. All right, for townhomes. So sale count. So we are up 8.1% on sales. That is the first market segment where we've seen an increase in sales year over year. So that's crazy to see. Percent sold over the original asking price, 10.4% versus 9.1% year over year, 12.5% drop. Another big drop is going to be days on market. So we are lower days on market. So that actually means that townhomes are selling faster now than they were selling last year. And then your median price per square foot drop is only 3.6% year over year. That's a really good sign compared to some of the other market segments. So now let's look down here. February last year, we're at 1.13. and now we're at 1.09. So not a gigantic drop in median price. Yeah, right here, 3.6% only year over year. In January, you can see we had a probably some really more expensive than usual townhome selling in January, because there's a big spike in here. But 1.09 versus 1.113 last year, pretty stable for townhomes. We can also see that townhomes are in a balanced market now, 16.6%. They were closer to a buyer's market last month. Inventory count, 2,322 versus 2,208. So more inventory month over month, and many more sales month over month as well. So look at this. There were 244 sales last month, and this month there's 385. That's a huge jump in sales and not a big jump in inventory. Ignoring this big spike last month, looks like things are going to be trending upwards for townhomes as well. It's a big jump in sales and not a big jump in inventory. All right, so that's what townhomes, detached, and apartments did this month. You can see the overall numbers here as well. So now let's keep going through the Greater Vancouver Realtor update for this article. New normal for Metro Vancouver's housing market continues. We can see sales year over year. So there was a 10% drop in sales, but the bigger context matters as well. So if we read here, it reiterates 9.8% decrease from the sales recorded this time last year, but we are 28.7% below the 10-year seasonal average. So this is not just a small off month. By historical standards, sales activity is still clearly subdued. So in plain English, fewer people are actually crossing the finish line when it comes to actually buying a property. Homes are still listed, people are still shopping, but fewer deals are being converted into completed sales. For consumers, that usually just means one thing. Urgency is way down. Buyers feel way less pressured to rush. Sellers have to work harder to create momentum. And, this just leads to a sluggish market. And here's a quote by the economist. We can read this together. Essentially, it's saying that the slower sales are becoming the new normal. So, with each passing data point, the pace of sales running well below long-term averages are no longer a surprise. It's becoming the new normal. A surprising find this February, however, is that home sellers appear less eager to list their homes relative to last year, with new listings down about 7%, mostly driven by fewer listings in the apartment segment. And we saw this when we were looking at market data for the apartments. So let's jump over back to 𝐕𝐈𝐃𝐄𝐒. We can see here inventory is sitting at 5,851 listings in February. But if we look back last year, 6,800 listings, 7,200 listings, 7,400 listings. Even February last year, we're at 6,000 listings, and this month we're at 5,800 listings. So the number of new listings is down 12% for apartments. So jumping back over to the article here, what is important about this is that the market is driven not just by numbers, but by expectations. And once activity starts to slow and feel normal, the buyer psychology changes. Seller psychology also changes, but buyers stop assuming prices are about to run away from them. Sellers stop assuming that demand will bail out aggressive pricing. So the whole market just becomes more selective. I hope that makes sense, because a lot of buyers right now are expecting prices to continue to fall even further. So that's why they're holding off on purchasing. And like the quote mentioned, sellers were actually way less eager to list this year than last year, especially in the apartment segment. So even with weaker sales, supply didn't surge as much as some people expected. That's why when we looked at the sales ratios, apartments were at 14.1%. Townhomes, I believe, were at 16%. Whereas, last month we were looking at nearly a buyer's market hovering around 10 to 12%. Now we're back up into right in the middle of a balanced market. That's how quickly things can change here in Metro Vancouver. All right, let's wrap up this article over here. So looking at sales ratios, I should have just scrolled down instead of going to the other tab, but 9% for detached, 16.6% for attached, and then 14.1% for apartments. We are 12.6% overall, which is a balanced market. I remember last month looking at it being a buyer's market. I was expecting prices to continue to fall, because if we're in a buyer's market for a prolonged period of time, a couple months, that's when prices start to fall. But seeing that we're in a balanced market for condos and attached is actually a pretty good sign. Detached is still struggling. Detached has been struggling for, the past year and a half, 2 years. So if you're a move-up buyer trying to buy a detached home, this is a great time. I mentioned inventory dropping here. We're still 7.1% above the 10-year seasonal average. So supply is definitely not tight, and there's still a ton of inventory in the market. Don't panic, things are not going to change overnight, especially with this much inventory. It is good to recognize these trends if you're planning to do something in this market so you can kind of get ahead of things. Because if you're only relying on price changes, you might be too late. Since the housing price index usually lags by, 90 days once the sales actually complete, not when they happen. And then, the total active inventory in Metro Vancouver is still 37% above the 10-year average, which is crazy. So, we'll see how things pan out. That things are not going to change overnight, like I mentioned. So the next big question we have to answer, and this is what I alluded to in the beginning of the video, is what is going to happen in spring? The logical answer is simple. Fewer sellers are coming to the market. Buyer demand is improving modestly. Then that may mean that inventory is going to stop building. And if inventory stops building, prices may hold closer to current levels instead of falling further. So in other words, the spring market kind of becomes a litmus test. Does the slow market stay slow, or does the small increase in demand tighten conditions really quick? And this is an important question here in Vancouver because sentiment in the market can change very, very fast. We've heard the term FOMO thrown around to describe buyers' purchasing habits, and it's true. But if I were to look at what's happening right now in this market, in this market update, and predict what's going to happen in the spring, I do think it looks like we will see balanced conditions moving into the spring. Prices might not drop off a cliff. I think overall the average price will continue to drop. But looking at how apartments and townhomes were performing in February is a really good sign that buyer activity is increasing, and potentially sellers are listing their homes for something that is realistic for today's market. And we're already seeing that, price-wise, pricing is down month over month, but not as much as we would have expected looking at the market update for the past couple months. So my advice for buyers should shop based on monthly cost, not just the sticker price. So test your mortgage payment, because your mortgage payments are changing constantly in this market. What you could have qualified for 6 months ago could totally be different now. You might even be able to afford more because your monthly payments are lower. So double check. Pay attention to anything else that will affect your monthly payments. So strata fees, taxes, own savings account for your home for repairs. That's going to be your real affordability number. Don't chase a deal if it doesn't make sense on your monthlies, because that's the thing that you're going to have to deal with day to day. And now if you're a seller in this market, price from today's competition. What I mean by that is you don't want to look at what things were selling for last spring, because that was a totally different market. And buyers can see everything now. They have everything they need in the palm of their hand. Their buyers are smarter than ever. So if your home is not clearly better, it has to be better priced. And if you don't need to sell right now, be honest about that too. Listing into a high competition environment like the market we're seeing right now without a strong plan can cost you time and negotiating leverage, and ultimately affect how much money you take home. Maybe move into the next property, move into the next investment. So you may be better off waiting. So what did this market update actually tell us? Well, Metro Vancouver is still a slower market by historical standards. Inventory is elevated, prices are softer than they were a year ago, but the market is totally not unraveling. It actually looks like it's kind of recalibrating. Detached homes remain the weakest segment, townhomes remain the most resilient, and then condos kind of sit in the middle, but inventory is down for condos, sales are up, so we'll see what happens. And that's why the spring market matters so much. If demand picks up while sellers stay cautious, this market could feel tighter very quickly. But if not, the slow, selective pattern continues. So if you like this market update video, you'll like this video I did on foreclosures. Foreclosures in the Fraser Valley right now are at an all-time high. And if you have any questions, shoot me a DM, book my calendar, leave a comment, and I'll see you on the next video. Peace.